You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody, or welcome back to Master Trader Live. Dan and I are here to speak today about using volume spikes, which essentially, in a sense, almost the only way I use volume. There are other ways of interpreting volume. I mean, over my time educating and looking at volume, especially in many other things, I just found it at times to be misleading based on the typical views, or stopped me from taking trades based on the typical views. There had to be increases in volume when it was going up. It had to pull back on lower volume. And to look at that volume was a little time consuming. I was looking at it. Oh, did it actually pull back on lower volume? But the spikes, they jump out at you. You can't miss them. And of course, they equal big money. Who creates those big volume spikes but institutional money? So we want to pay attention to that when we see them. And it's so easy to see them. And we don't need any indicators whatsoever. But there are various volume indicators that massage the volume to kind of to tell you is big money coming in or big money coming out. I mean, it's price that tells us the trend and whether prices are moving up or down or sideways or how fast they're moving. But when we see the volume spikes, it gives us a little added something to our analysis. Ultimately, it's the price that we're trading, but every piece of information that we can put together to formulate a strategy that puts the odds in our favor, why not do it? Let's get to it.
All right, good afternoon. Welcome, everybody. Now, everything Greg just said, this is our technical approach, and these are the major categories of things that make up our method. Everything is price and pattern oriented. What's the compelling setup? Bar by bar tells us what's going on in that particular time frame, applies to anything that moves. Then we're putting the multiple bars together to have a tradable pattern. Okay, I have a tradable pattern. Where is it in connection with the trend? Are multiple time frames in alignment? Because that's going to increase all these other concepts that we're adding to the price setup is going to increase the probability of that trade working. Is this particular setup on support for a long, resistance for a short? This is a little fun saying that we've come up with. McFly, look to the left. Let's see, is this pattern on support or is out in the middle of no man's land? Moving averages, we call them visual aids. They just speed up the process. You'll see on every one of our daily charts, we have the 20, 50, and 200. And it just visually helps us of where the pattern is. And then again, the odds of it moving forward, because these setups can happen in any trend, up, down, or sideways. This is today's session. Volume analysis. We say that the moving averages and volume they're secondary. We will take a trade without these, but they're additives. So it serves as an excellent indicator of, and not only potential turning points at extremes, high and lows, igniting, ending, which we'll get into, of course, but it's also a good indicator of the trades working as intended, because, Greg, you came up with this term, committed volume. Remember, let's jump down here to Greg's comment of why committed volume is important. Every candlestick, every print patterns are a picture of psychology in motion fueled by money. So if we have a nice bullish setup and we see increasing volume, that's confirmation that other collective market participants have the same bias. And so we're moving in unison. Position and money management. Greg says we should start with this for good reasons, because without that, most are destined to fail. But once we're ready, it's like a checklist for the pilot. We're ready to take off. Okay, we're taking off, and now you're managing the position with proper money management in between.
Even to enter the trades, most that get started have no idea about share sizing and stop losses. I didn't. And it's one of the main reasons so many fail at this. And it's amazing when you think about it. Most of us don't think about it at the beginning because we're so focused on, how we're going to make the money, right?
Right. They get excited of these patterns we teach them. It's like, all right, I'm getting in this thing and say, okay. And you have a good analogy about opening a business. You got to have a plan, a business plan before you open a business. Same with this. Okay, I have a good pattern. How much am I gonna risk on this trade? How I'm gonna manage it? Per your account balance per day. And Greg has an amazing course called Advanced Money Management, AMAMS. So this is the starting point of this. Price is king, candlestick analysis. And then we apply those other concepts. Volume. Let's couple more words on this. We just said that. We talked about it. So igniting volume ignites a new move with a confirming pattern. You cannot, a big volume gets our attention. But as with everything we do, we don't do anything unless it's a pattern. And then, as I said, the volume, moving averages are just add to the confidence of that pattern working. Climactic, we say, ends a move because it's the last of the bulls and the bears getting in, and range expansion bars coupled with big volume says, yeah, these are the novices getting in at extremes. This committed is what I mentioned on the other slide there about institutions coming in, and increasing volume is a positive. Is it a warning sign, as Greg said in the intro, of, uh-oh, I bought this breakout and I don't see volume increasing? No, as long as we're trading the candlesticks. So Greg,
I'd like to ask this question before we go ahead. It's climactic volume. And we see how many people answer, how many people don't want to answer, but they've done it. How many people have been in a, let's say, long position and went against you, maybe didn't know what a stop loss was, or didn't adhere to a stop, and it's gone down for a while. And at some point, you just can't take it anymore. And you sell, and it's within intraday, maybe minutes, or on a daily chart within a day or so of the low, or it is the low. How many people have done that? Two? A few, right? So when you're starting out, look, that's going to happen. You're trying to figure out what works. You're testing things. And from a certain point of view, you are skeptical, and that is intelligence because you're questioning, but you're uncertain. So you're not even sure if you adhere to the rules that you've already been told that make sense to you. And so when things are going against you, and now you're in hope mode, it's not what we call intelligent hope mode, but you're in hope mode, and you're looking for every possible reason why prices are going to stop going down and you're going to recover that loss. And at some point, we're so convinced that it's not going to stop going down. We can't take it anymore. We've reached that emotional peak. And that's why I was going to tie the psychology of this idea of climactic volume and the idea of a wide range VAR and the volume spike. Now, how does that happen when so many people are acting in unison? Because to create that volume spike, and it's not just inexperience, because we said volume is, institutions, and we're all human, and we have these emotions. So how is it possible that we're all acting together? Not all, but so many are acting together in that moment to create that wide range VAR. And so how, I don't know, I can't really say other than to say that the psychology is connected to it. And so many people got on the wrong side of something, then at some point it reaches that climactic point and you get that volume spike and that wide range VAR. And this is one of the reasons why we would say charts don't lie. Now, it doesn't mean patterns don't fail. That's another subject. But when you see something like this and you've experienced it, and that was a huge thing for me in that starting out, and I think for everybody, because you learn theoretical stuff. It's like going to school and reading a book, and then you actually experience it, and that's what makes it real. So trading is that way too. Whether you're experiencing the good and the bad. When you experience it, it makes it real. And then why I asked that question, because if you experience that, and then we're talking about this here and we show you pictures of it, that's when it really clicks.
So Greg, before we go, can you explain these two images you put in here? I don't quite understand them.
I think you put them in there, Dan. What Dan is saying there is that's a foot on an accelerator and it's wheel spinning, with the horsepower that smokes the tires, but the car ain't going anywhere.
Right. It means a couple things. So this is volume. So this is committed volume. Committed volume in the intended direction is a plus. This actually, in my opinion, because I put the image here, shows two scenarios. One is an igniting volume, but the car is moving, it's an image, but that's the accelerator, the wide range igniting volume. But it could also mean, and what we're going to show you is, hey, there's a lot of demand. There's a lot of acceleration being thrown at this stock. And why isn't it moving? And there's only one reason on earth that it's not moving, is because there's an equal amount of selling going on that's absorbing all this buying. And so that's a warning sign of this thing should be moving and it's not. So let's go to the examples as we always do now. But Craig, why don't you explain this, that an oscillator is a derivative of price and volume, and people who want to tweak these things, they can give misleading information.
Yeah, I mean, this is where so many of us start out, because we're inundated with the indicator-based methodology, with these great platforms that have so many indicators in them. And so we're led to believe that this is what we need to make decisions. And eventually we all reach a point of either, if you're continuing to use indicators, excuse me, accepting, the way that they can mislead, and you continue to do it because you don't know what else to do. And I was there.
Agree.
And, eventually it was like, well, look, I tried it every which way, different settings, different this and that, and ain't working. One last aha moment, maybe, before I throw in the towel. And that was, hey, let's take them all off and see what happens. That was a scary moment. I was like, now what? Now what am I how am I going to decide what to do? And I was like, hey, McFly, it's the prices. And so, different ways of, looking at this information. This is some kind of histogram, which is usually the difference between two things, two price levels. or manipulating the price and trying to figure out what's oversold and overbought. Then it doesn't work. And so you change these settings, whatever that was here. And this is some other kind of trend thing or volume thing. I don't know. I just picked different stuff and how it's
Sure.
moving up and down. And, you know,
Totally.
different channels and bands and so on and so forth. And it just, for me, it just led to giant amount of confusion, and it does for so many others. And at some point, some people have more indicators, and we ain't even getting into, you know, the Elliott waves and you know, the waves and the waves and the waves, and that have more waves and waves. Anybody ever see that kind of chart? Waves and waves, and eventually you get to some master wave that calls a top out there in 2025 at 3 o'clock in the afternoon on a Wednesday,
Exactly to the day.
you know?
Right.
So, you know, it's all about the Holy Grail. And if I do all of this, I'm never going to lose any money, and I'm going to make $1 gazillion with the ultimate indicator. Give me a break. Sell me the Brooklyn Bridge.
All right, so we're going to come back to the same slide. So just look at it. Could we trade this identical chart without volume? We already said yes. Here's our moving averages. That this is our simple every daily chart looks like this. But we're going to come back to this and look at these spikes, turning points, in a couple minutes. Wide range igniting bar. So that's the spinning tire igniting it, and wide range ending bar. This is what Greg was talking about when he asked you all that little quiz question. Climactic buy setup. This is the biggest red bar in the entire decline here. Look at the volume, the biggest volume. So that is a lot of panic selling. What happened the very next bar? I have bigger volume with what we call a bullish 180 reversal. It was on our slide of 9 bullish patterns. So that's what we call a potent reversal bar. The volume is a plus. So that is a wide range ending bar. Now, could it have continued lower for a couple more bars? Of course it could. And so it's just the wide range bar and the spike in volume tells us to put it on our interest list. This is something that I would say in the green trading room at the end of this day. You will reverse eventually. So I'm going to put it on my list every day, and I'll tell you when I see a setup that I'm confident in a short-term reversal.
That was that bar that I put the check mark on, is that bar that we were all in at some point, or
Right.
trade, and we sold the low of the move. And honest to God, years ago, it was like, how the hell do I do that so many times? And then it was like a discovery of like, hey, there's a picture that shows that. That's the picture.
Wait, Greg, a funny quick example, just because it's illustrating this. So when I was trading with you live in New York, do you remember Rick sitting next to me? So this looks like a picture of Rick buying this one reversal bar here in a downtrend. And he's sitting in this for 3 weeks. He's walking over to you, Greg, what do you think I should do? I see him pulling up Yahoo Finance and looking at fundamentals for reasons to stay in. And then you tell me on like this day, tell me when he sells it. And I did not know what that meant at the time. And I go, why do you want to know when he sells it? And because the capperism is that's going to be the low. And so here's our igniting bar. Look, we're in a multi-month consolidation, bottoming pattern, 20 MA, 50 MA flattened out. Look, you got to just think of what volume is. It's number of shares trading throughout the day. So you had this volume dwarfing anything on this slide. So you had a big number of buyers and a big number of sellers. But the bulls won the bar, eating up all as much supply as they could, and that's an igniting breakout. this is a concept, what we call a price void, which just means, momentum move, look to the left, there's a big way for it to go back up into the void. This is one of the patterns that was on the 9 called a bullish 1, 2, 3 continuation. Somebody asked me earlier, would I still trade this 1, 2, 3 if the volume was anemic? 100% yes. But this volume is a plus because it's telling me that there was a lot of the bears also shaken out of this thing, and that the demand dwarfed the available supply sellers. So this is a great example of these two terms, igniting and ending. So here, there's really no pattern yet, but it came down to the 50 MA. This is like, whoa, pay attention. Look at all this pickup in volume. And look at now the size of these two green bars are dwarfing the others. So this is bullish, committed, igniting volume also. It's still in an uptrend, right? I got a flat 20 and a rising 50. So this is telling me that institutions not only bought the dip, but they're now accelerating the breakout with their committed volume. Here, ugly red bar, pickup in volume. This is the biggest red bar since it looks like this one over here. So that suggested lower prices. What happened the very next day? It's a shock professional gap breakout, and the same amount of volume on the downside is to the upside. So you had new buyers and you had shorts buying to cover. So that's a plus for a gap trade, a swing trade. Here's another 1, 2, 3, and nothing to the left. And there you have it. Greg, you take this one. These were two AI stocks that we were looking at the other day, and we were talking about volume and talking about today's subject. So what do you got here for us?
Well, I mean, you can see the big volume spike there that occurred here. It catches your eye, but obviously you can see the prices. It did the same thing. So this gets into another subject as far as support and resistance, repairing damages, which kind of like is what happened here. And then look, there's like no volume as that pulled back. And someone would say, well, it pulled back on light volume. That's good. Well, I would say, why in the heck did it pull back all the way? Because what happens with these kind of gaps, I guess this was news. Whereas when you see stocks, for example, Meta, I think, was it CME or CRM? I forget which one. When they gap up on earnings like that, what they typically do is they wind up grinding sideways for a while, and then they go higher, versus this one pulled all the way back. So more, news related, where we've all heard enough about AI. But here, look at the volume as it goes up again, but you had to be in before the volume spike.
Right.
Like, so over here, right,
we
have
talked about it
happening,
on this day.
yeah. But, it just gets into a whole nother subject of another MT Live about retracements and, bullish price action. And that's what we cover in the courses, the whole enchilada versus, MT Live. Here's the subject of volume. But what I could point out here is that look at how low the volume was. It didn't foretell what was coming. Not that anything really foretells what's coming. Right, meaning no one knew that it was going to go up like it did that much, but we knew at this point the probability was that it was going to go up some amount. And that's what all our patterns do, Dan. Like you're bringing up this one here. Like, no, you go back to the one that you were on there.
We were in the green room on this day. Yeah, go ahead.
Well, on that day, I don't remember. It was probably something else that I think we started to look at that day because of what was happening here. And I brought up, hey,
And
There are some other stocks that do the same thing. And we
That's-
looked at that and some others. Yeah. But go to the next slide. So, we won't spend too much time
Yeah.
on this.
So again, just, we could trade without volume, but I have a climactic buy set up. I have another 180 reversal. You can tell just pick up in volume. As the stock is down so much far from the 20, I still don't have a pattern yet. Remember, we only trade patterns. My pattern is this 180 reversal. So that gave us a heads up of a short-term bottom. This is an igniting gap. So this gapped. So this isn't a downtrend. I got or a big fat sideways trend, let's call it. But I have an igniting gap, bottoming tail, range expansion. That's telling me there's a lot of market participants. But do I buy it here as a swing trade? No, there's no pattern. Greg, take it from there. When is there a pattern?
And I wanted to make the point that we are pattern traders. So not every pattern tells us to do anything. Some patterns tell us stand aside because maybe we just don't understand that particular pattern, right? But these patterns that we look at, like what I just drew a little box around that pattern right there, those bars alone would tell me think long. But when I put it in the context of this and I see this volume and I look to the left, I'm like, that's going to go up. So these pictures tell us when to act. And these two bars, which were on the other slide, which was marked a bullish 180 reversal, those two bars by themselves don't mean a lot until you put it together with everything else that's here. And they tell us that it should go up because it did that.
All I'm showing here, I mean, this was an ugly breakdown, gapping over an ugly red bar with a closing breakout. And it's sloppier, but I have a big price void because of the way it came down. And then kind of another 1, 2, 3. That's where we gave it to our subscribers here. This is an option strategy where we sell an out of the money put, buy a further out of the money one. We're just calling a short-term bottom. Here, I really should get rid of this guy because he's blocking the strike price. But we sold a put under $20, which means we're taking in money and we're saying, I'm either willing to buy the stock at $20 if you don't mind owning it. We do them for speculation trades because we're swing traders. And we say, I don't think it's going under 20 bucks by expiration. And this is a closed trade. We give to our subscribers in Telegram, we give the strategy, the stock, why we're entering it. So this was a bullish gap breakout on volume, today's subject, over a red bar. So there's a shock pattern. And this was an earnings trade. So this was on our morning gap list. Sold it for 50. A couple days later, I said just bid 5 cents. And we made 10% return in 5 days as it moved up.
And it's not an options MT Live, but for those that aren't familiar with credit spreads, it's a basic concept of selling one option that is more expensive than another, and you buy the less expensive. And this 50 cents that's marked here is the money that they put into your account until the expiration or you close it. So you might keep the whole thing, part of it, or you could lose money. And so one option is equal to 100 shares. And so if you sold 5 contracts, it's 250 bucks, 10 contracts, 500 bucks. And so you can see Dan marked here, that was the recommendation to close it.
Yeah, I just wanted to get rid of this because it really shows where that 20 is. So let's just call this 2150. So we sold it $1.50 under this bar. Very high probability trade right there.
All right.
All right, so look, remember moving averages? This is in a power downtrend. 20, 50, 200. So this would have got my attention just to create a bounce and a downtrend, but it didn't go very far. So that's just the nature of trading bottoming patterns and nasty downtrends. It gets more interesting over here because the 20 MA is starting to flatten out. So you got, buyers are starting to step in. This was an ugly red bar on big volume. This is a bearish 1, 2, 3. I don't short $2 stocks, but that using our approach is a short under those two lows. It didn't trigger. Now I have a green bar. Greg calls this, it's not a 182 bar reversal, but it's a 4 bar reversal on big volume. That's a sign of it doesn't want to go lower. Now over here, red bar ignored, closing breakout above the 20 and the 50 over this bar's high. Big old price void, multi-month bottoming pattern. That is a phenomenal bottoming pattern now.
You know what I would point out on these, on those volume spikes there, especially the red ones. Look at that one. Look at this one. Look at this one. You see the difference? Anybody see the difference there? I mean, it was still going down. But as we look at the details of what's going on here, and I'm pointing this out to you, so because as pattern traders, we need to spot details that could give us insights as to are things beginning to change. And what I see with that first one is that's a giant bar. And it took out that bar's high.
Yep.
So that was a powerful bar. Now this one, it's like it broke to a new low, but it's nowhere near the size of that bar. So I'm still going to think it's going down at that time. I have no reason not to. It broke under these lows. But now, before we looked at a bullish 180 reversal, right? However, this is kind of the same thing. And now you got this volume spike.
4
Well,
bar.
the trend is still down, but it's a clue. It's like something's going on here. And then, okay, it retests, still in a downtrend. Now it comes back up, and now you got that bullish 180 on volume. And this is, with basing patterns. I mean, for swing trades, I like them to be like this a few months long. I'm more confident with that something like this can go up, putting it together with all of that versus, trading off of the low. So some of these that we look at, these bottoming patterns, we say, hey, that's great for a credit spread, but not really a directional buying it. But here, this is more of, you could do a credit spread, of course. I mean, it's a $2 stock, but we apply the same concepts to whatever the price is, but that looks like it should be able to go up.
Yeah, no, beautiful bottoming pattern. All right, so, just your eye, once you get experience, can just kind of look for patterns and look for volume. And this is a big old mess. I got no interest. This increasing volume, another 180 reversal. But again, I'm going to keep highlighting. Does that mean I buy over the high of this? No, because remember our slide, where is it on support, the trend, price void? This is nothing. But now I have 2 of these 180 reversals on even bigger volume than the first one. That's telling me, homie, I'm not going down anymore after this green bar finished. I'm not going down in the short term. I have this, I have this, I have this. So now I have a closing breakout. You would have had my attention for a put spread, broke out, 3-week consolidation. This red bar. I'll always look at a bar of what did it look like at the high or the low. So at the low, this was a breakdown. Bounced a little bit, still no pattern, inside bar, higher high, higher low bar, closing breakout. That's your action bar. Now I have a big price void from a multi-month bottom. So I got a retest here, OIH. We have a third advisory letter that we only trade ETFs. So this was on our, we were watching it here, moved up a little bit, got a retest, went sideways. Right here is where we gave it to our subscribers on this day. Bought the ETF here, wide range bar from a reversal at major support. Look at this is now the definition that we define as committed volume. I have the biggest green bar in this whole chart. That's a closing breakout. Biggest, well, not the biggest volume, but increasing volume in the direction of the intended bias of the chart. Come check us out in our live trading room, the green room. mastertrader.com/green trial. We purposely just have a no-brainer, spend a week with us, ask us questions, watch us scan, watch us trade. We trade gaps, review open positions, answer questions. It's a fantastic place to watch us implement our approach in real time instead of talking about these beautiful slides that aren't moving. But we always say 15 minutes of time in these sessions to look at real charts. So we get to answer your questions, come up with some trade ideas, answer today's subject on real charts. So this I'll just be quick. These are our swing market internals. We look at breadth, which is McClellan oscillator, trader sentiment, the put call. And these are telling us that these are in way bullish territories because they're contrarian indicators saying the market participants and the market breadth are very bearish. What's today's subject? Volume, patterns, etc. So this is a climactic buy setup. This was a while back in the spiders. But look, I'm down a lot, okay? 280 to 240. Far from the 20, I have 2 days of just puking volume with the market internal saying, you will turn. I don't know if it's today, tomorrow, the next day, and next day. But this is a 100%. I'm waiting for a bullish reversal to trade the bounce setup. And if you went back and looked at it, I think it happened the next day, possibly one more day after, but so the volume is just adding to everything else I just said. Another climactic range expansion, big bottoming tail. Remember at the low of the day, it was an ugly red bar, closed with a green bar. How did that happen? Well, on the biggest volume of this whole chart. So that is my reversal bar. Could I have traded this just over the high for a bounce? Yes. But these X would stop under the low. But now I have 1, 2, 3, I have 4 pretty much inside bars, building a bigger base of support. This bar is now a closing breakout of these 5 bars. Now I'm ready to buy over the high of that bar. So the increasing volume in this case is saying there's a lot of selling, but there's also a lot of buying and it's not going lower. That's what that volume's telling me. So it's a plus that it doesn't want to go any lower in the short term. All right, almost done here. These similar type of climactics and ETFs as that other one. same. These are two with same, volume spike is saying, pay attention. They're extended, but we're trading patterns. Same. This was, we did a put spread on this, which we showed you one example early. Once I had this bottoming tail and spike back and just chopping around, pick up in volume, it's telling me it doesn't want to go lower anymore. We sold this out of the money put spread, money in your account, and same as the other one. We talked about it. Greg, why do I have a rocket ship here? The heck does this mean?
I have no idea now. I think you like playing with rockets.
Yeah, but you know the answer. So look, this thing,
That thing went up so much.
this thing went up over 700%. Okay. So the client, we've shown you a couple of examples of climactic buy setups where people are fearful and they're like, oh, they panic at the low. This is just the identical on the greed side. This thing, whatever it was, $3, now it goes up to 20. You have buying. Look at this. So now I have the two biggest volume bars in this chart's history. After it's gone up 700%, wait for a pattern. It doesn't mean this thing could go up 10 more days. I have no idea. But this is telling me, watch it every day. You will turn. So my icon means you are a space shuttle rocket ship. This fuel will expire. That's what that icon means. You will come back to Earth unless for some reason you get bought out at these high prices. And so we're watched day by day. On this particular day, this topping tail day, we nailed the top on this thing. Had a little breakout failure, pulled back, what we call a failed buy setup, right where this arrow is. So look, the high of the day is 20. We sold $10 more calls, and we took in an astonishing $1.75 a share. And that's because in both times of fear and greed, option prices escalate. So as option sellers at extremes, then we take in beautiful income using our approach. So I love these on both sides, fear and greed.
This is electric car company, right? They make trucks.
Yes.
And so it kind of becomes, this happens at times in a particular sector, whether, it was the electric car hype at the time. A couple of years ago, it was marijuana charts just like this.
And now it's AI. We showed them that chart.
Which they haven't hit this yet.
And
They haven't gone totally vertical like that. So it's still young in that particular sector to potentially do that.
true.
And again, look at the moving averages here. And one of the things with this kind of situation, and the reason I'm mentioning like a sector kind of thing to put in your mind that something like this is possible. And it's normal and logical to think, hey, this thing went from $4 to $8 to $10. It can't go any higher. And now it went to $20, the insanity. And so don't short something because you think it's too high. But when it goes like this, and Dan is showing you an intraday pattern. It's something that's a whole number. It's rallied 700%. So there's many other things that are being looked at besides, hey, what? It's more than doubled, it's tripled, it's quadrupled, and so on. And then the stock wasn't shorted because that could have led to annihilation of your account, where he said a $30 call, another $10 away up here in the stratosphere.
Which is 50% higher.
Yeah, 50% higher, was sold for $1.75. So what was the probability of that happening, right, in 2 weeks? Maybe. But with options, if this thing just started doing this, that price would have collapsed. Whereas if you shorted the stock and did that, you might still be break even, where this could, in a few days be a 75% gainer.
Exactly right. All right, one more, and then we're ready to look at the real markets. So this is a slide we started with. So now let's kind of apply what we learned here today. So this, we weren't talking about moving averages today, but we still talk about them. So look at this beautiful rising 20 MA above the rising 50. So I'm consolidating into the 20. Now I have an igniting continuation breakout in an uptrend on increasing volume, closing with a range expansion, beautiful bar. That's beautiful. Now this red bar increasing in volume on the pullback, that actually suggested lower prices, maybe a pullback to the 20 or something like that. NFT means no follow through to it. So it got its sea legs back and made a new high. A little breakout failure there. Then, we made a lower low. This volume doesn't tell me anything. But now I pull back deeper to this igniting area at the 50, and I have volume expanding. That could have been a swing trade and just go into trail mode. I would have no idea how high it would go. This was a bearish gap, a little bear flag, so increasing volume on this breakdown. Volume's picking up here, selling. Remember, just because something's down a lot, I'm waiting. It's on my watch list. This bar right here, what we call a gap reversal, engulfing bar on increasing volume. Now you have my attention. Got a couple inside bars here. Greg, this is what you call the tell. Look at this beautiful last bar. It traded under these lows, range expansion, closing breakout with a price void. Now it's go time. You buy over the high of that green bar the next day, stop under this bar's low, manage in between. Every chart we look at, we're applying the concepts that you learn in Greg's swing trading course, which teaches you how to objectively read price action patterns, apply all these concepts that we're talking about. And once you take the course, you have the raw knowledge. That point forward is just about seasoning. Start slow, paper trade for a week, get used to the software, trade small position size, develop your trading plan, of course. What are you going to trade? What time frames? How are you going to manage them? And it has many other things in here: trade management, trader psychology. Whether you're new to trading or been around for decades, this is an amazing course. So even with our option trading, we have a technical based approach. So I still send interested option traders to this course first, because you have to have a bias before we can then decide what's the best option trade for your bias.
All right, let's do this.
All right, 10 minutes. We'll take a look at the markets here, which I see, the bearish reversal day started yesterday. We're having bearish follow through here today. We'll answer any question you like. We like, looking at patterns, of course, but highlighting the day's topic, which is volume.
So what I did on here, you see the volume, but I put a volume visual aid on there where we can measure increases in volume from day to day. And what that shows is we want to see a more than 100% increase over volume. And that's what this is marking here. So we can see the giant spikes, which is what we looked at over the last 45 minutes or so. We can see that. But one of the things that we can do with this in this platform, which we share this with subscribers and students, is we can put it in a column. So in our interest list, we can see when there's been these huge spikes in volume. So I just picked this Bitcoin Grayscale ETF.
Greg, what does visual aid mean? I don't even know.
That means by looking at this, you know what it means. But by looking at this, I can just visually see, even if I take the volume off of here.
Oh, it
something
is.
happens.
Okay. It's a line chart of volume.
No, it's not a line chart of volume.
Okay, see, I don't know what it is.
You'd have to look at the formula, but there's a formula that's measuring the volume. And then when I put the line here, there has to be 100% increase. And so it spikes up when it spikes that, but then I just put a horizontal line at 100.
Got it. Okay.
So, down here, it's like, oh, it's low, whatever, but I can see that here, it's going. But when it spikes like that, I want to pay attention. So that moved down. We looked at a slide like that. Look at that big drop. Now, that was less, but still it spiked up. That was a lot of volume on the way down. This is the concept we call repairing the damage, because that was serious.
Mhm.
That wasn't to be taken lightly, because we can see this chart, it didn't go down. That was a strong signal that it was going to go lower. But it retraced back up again. But here, you can see it spiked. Now you saw the spike, and, it happened on a breakout, but we're measuring it. Right? We're measuring that, giving it a number, so to speak.
Yeah.
And here again, and so that was okay. It's gone up for a few days, and so on. And here, spiked again. Didn't stop it from pulling back and getting scary. And then it spiked again and spiked again. So there was lots of spikes, and now it's going sideways, as we can see, on very light volume. So we can put that in a column. And so this is down 100% on volume. That doesn't mean, why isn't that switching? Oh, I see why. So I changed this. I did this for us. But so I could sort this, this is just bringing up stocks that are in a particular sector. So why it's got these in here. So we look at something like, Boeing, it'll bring up stocks that are related to it. And then like this. So I don't have the 100 on here, but
Right.
Big spike.
Well,
I'd have to figure out how to do that. But here on the way down, something else that maybe that we are more familiar with. Any symbol. What do you think, Dan?
Apple, because I see it selling off today. There, that looks like a short. Yeah, we did a
That's the
call.
one we
spread
just
on-
did the spread. Yeah.
Yeah, today.
All right. So in nowhere on here. Let's just see here. Well, let's see, because it doesn't automatically put that on there. I'm interested in 100. And none of these. We see volume spikes, but it didn't meet that criteria. So I use this mostly. I don't put it on a chart. I put it in an interest list in one of my columns of stocks that I filtered, which brings about 700 of them through the filter of stocks that I could be interested in. And in the column, I then can say, I have a column that says, show me this, because sometimes I miss it. Show me one of these giant spikes that happened within the last 3 days. Me. Yeah. You can see that. See how it just jumps out at you? And that's near a prior high. But it's like, look at that activity and look at that pattern with a topping tail. You're thinking call spread. What's time to expiration here. And sometimes the volume doesn't pop out so much, but let's see. You got to figure out how to put that. Yeah, that got above 100 up there. So scanning is a big part of what we do to be able to zero in on some of these stocks, because look, I can look at 100 stocks, but that's kind of, labor intensive, so to speak, of spending time versus using this platform. Find me stocks where there's been 100% increase in volume, and then looking at the pattern and saying, hey, that's at the lows here. If that starts to go up, that's a call spread. It could be for day trades. There, it looks like a breakout failure here. Yeah, well, here it did. It moved to a new high and it failed. So and it happened on a huge amount of volume. So that's very good information. So as we talked here, volume spikes for me are the biggest advantage of using volume versus saying, oh, it went down on low volume or up on low volume. It's either going up or down. It's, it'll keep going up or down until it reaches resistance or support, or there's some kind of failure pattern. Whereas if there's a volume spike, that means there was a whole lot of activity. Big money was changing hands, and let's look at the pattern and trend and see, what we can gain from that. NVIDIA, big volume spike, and it broke out from a pullback. This might have been earnings. I don't remember.
I think
But,
so. Yeah, it was.
This is what I was saying earlier, that you get these kind of volume spikes on earnings, and then they go sideways for a week or two. They typically go higher. That's a pretty common pattern.
Yeah, that's a good example.
Yeah. Meta, right? The big volume spike. It took a long time, but it's worth keeping an eye on these, especially these institutional favorites, that they typically go higher. These notes here are notes that I put in, that even while this is up here, institutions are upgrading this now. Even though it's already moved from 100 to 200, they continue to upgrade it, which it's probably going to go higher. And it's reaching a pretty stiff resistance area here, but so far it's holding up. They're asking me to look at ABBV on volume today. There's no volume, but this was like a 500% increase in volume here, and it didn't move. It's kind of like a head scratcher.
Well, I was just going to say, I don't know how to read that either, other than it didn't go down, other than the one little blip,
Right.
and it then subsequently broke out. Right.
Right. Yeah. Thank you, Marcelo. Marcelo's telling us great session. He enjoyed it. So we have our method, right, that incorporates volume spikes as well as support, resistance, trends, and everything else. And we can utilize certain criteria like this, incorporating it into scans that can put us in the ballpark of what we're looking for. Let me just go to this particular. Right, so we can go here, right, and these different scans, 1, 2, 3 setups, right, and we can put that in a column. Here's, the wide range bar one is one of our favorites, and looking for wide range bars. There's no,
Yes, earnings.
right?
Okay.
It doesn't, that's not a volume spike there, but it's a nice breakout, Dan.
Absolutely. It was on our earnings list this morning, but it just went.
Right, but tomorrow it could be a 1, 2, 3. Right, it's definitely one to tag, and we can tag this here. I'm going to flag it, and it's going to put it into a minder. Another wide range bar breakout. I'm going to put that in a minder. So it looks for wide range bars. You have to know the patterns. Could be a wide range bar ending. Another breakout. So, a bearish market, but there's things that look great. Again, we share this with students and subscribers. I would say that something like this is worth hundreds and hundreds of dollars that we share when you become a member. You could subscribe to the Weekly Options Trader. You could subscribe, to weekly lessons for 11, 12 bucks a month, weekly lessons. And if you use this platform, which we have no affiliation with, we share this with you at no cost. So I hope you enjoyed this. Share Master Trader with others, and we'll be back next week.
Good trading off.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.
We got the violation. Why it's running like that?